Imagine turning your XRP holdings into a six-fold or even a 27-fold gain. According to the latest Bifrost-Bridge analysis, those numbers aren't just dreams, they're on the horizon. But that's not all. A leading expert predicts that XRP holders are on the brink of massive wealth, citing groundbreaking developments that could redefine the crypto landscape. Let's dive into the numbers with our comprehensive XRP technical analysis, uncovering the trends and signals that could signal your next big move. Let's start with a question. Did you know that XRP has recently witnessed its best monthly performance in 7 years? That's right. Just last month in November, XRP surged by a whopping 283%. To put this into context, that's the kind of monthly growth that it hasn't seen since 2017, the year when the entire crypto space caught fire and set the stage for massive bull run that followed. And guess what? December is carrying that momentum forward, adding another 26.4% in just the first 12 days. Why should we kind of care about these numbers? Well, because rapid gains in such short period often hint that something bigger might be brewing in the background. When an asset like XRP starts breaking out of long-standing patterns, seasoned analysts begin digging for clues in kind of historical data, looking for cycles that might, well, repeat. The cryptocurrency market update that you're watching is your front row seat to understanding these crucial signals. Now that kind of we know what is going on with XRP and the XRP is on a roll, let's kind of explore the Bifrost Bridge analysis and why it points to much loftier targets ahead. All right, so what is the Bifrost Bridge thing all about, right? Well, the name might sound kind of mythical, like something straight out of a Norse legend, but in the crypto world, it refers to a particular analytical approach used by market analyst 𝗕𝗓𝗓. His method involves comparing current market moves to past cycles to forecast potential future price behavior. Think of it as studying old maps to navigate to new territory. 𝗕𝗓𝗓's comparison is kind of simple yet very powerful, right? He looks at XRP's recent price action and draws parallels with the 2017 cycle, a time when XRP went from relatively unknown to a top 5 crypto by market cap. Back then, XRP's run-up to its all-time high of $3.31 in January 2018 was preceded by patterns strikingly similar to today's situation. Now, by examining Fibonacci retracements, historical price movements, and the timing of these rallies, 𝗕𝗓𝗓 believes the current trajectory could guide XRP to two major milestones, $6 and then a staggering $27. Before you think that's too good to be true, remember that many historical breakouts seemed unlikely until they happened. Now, we've got the framework down. Now, let's drill into kind of the specifics of how 𝗕𝗓𝗓 arrived at the $6 figure. Here's where things get interesting. In the recent Bifrost Bridge analysis, the first significant price milestone for XRP is the $6 region, more precisely between $4.30 and $6.40. Why this range? Well, according to 𝗕𝗓𝗓, it's tied to the Fibonacci retracement levels, which are essential tools traders and analysts use to kind of identify key areas of support and resistance based on past price movements. Now, back in 2017, XRP had what 𝗕𝗓𝗓 calls a kind of purple foundation, a critical support zone. From that zone, XRP rallied 150% in March of 2017. That initial rally may have seemed modest at the time, but it set the stage for a colossal 1,330% gain 2 months later. Fast forward to today, and we see XRP making very similar moves from critical and crucial support levels. If history is repeating, the price range surge, or the price should surge, could potentially be an opening act for much grander and greater performance. So let's break it down. In 2017, a 150% rally acted like a starter's kind of pistol for a much larger run, if you will. And today, XRP's big November and December rallies could be kind of ringing the very same bell. If Fibonacci retracements align similarly now as they did back then XRP might push into that gold range or gold region between $4.30 and $6.40 in the near future. Of course, no one can guarantee this outcome. The crypto markets are unpredictable as ever, and external factors from Bitcoin trends and Ethereum's developments to kind of regulatory news can influence the prices. Still, seeing these alignments give us a framework to watch out for. Now, we've talked about $6, which alone is an exciting target, but the real showstopper is in 𝗕𝗓𝗪's analysis, which is basically suggesting $27 is a possibility. Let's explore how that might happen, right? All right, so now that we've kind of got to the part that you've been waiting for, is $27 even remotely possible? A run from a few dollars to over $20 might sound like an absolute moonshot, but let's consider the logic behind it. If the historical pattern holds, the big move to $6 would set the stage for a more colossal rally, something in the range of 1,330%, just like we saw back in May of 2017. If XRP repeats that kind of performance once again, then we're talking about a price that could push into the second golden region identified by 𝗕𝗓𝗪, falling somewhere between $13.70 and $27.30. For January 2025, 𝗕𝗓𝗪 even pinpointed this massive leap. If the timeline plays out, we might see XRP attempting a multi-1,000% rally that could transform the crypto landscape entirely. Now, let's be clear, these are not predictions that are set in stone, right? But these are possible targets, then they do serve as reminders that in crypto, the unbelievable can become believable when all the right factors align. Now, could it happen, right? The historical precedent exists. The question is whether the market conditions of 2024 and 2025 resemble those of 2017 closely enough. One key difference is at least this time around, is much larger total market cap and greater liquidity. Factors that skeptics often cite as reasons why repeating 2017's gains might be harder. Now, speaking of skeptics, let's address the elephant in the room: market cap and liquidity. Can XRP realistically expand enough to justify these sky-high prices? And here's the big pushback. But what about the market cap? Isn't it way harder for XRP to reach these new heights now that the market cap or market is much bigger and more liquid than in 2017? And well, it's a fair question. After all, going from 20 cents to $3.31 in 2017 is one thing, but going from around $2.50 to $6 or even $27 in a market that's already feels huge is a very different challenge altogether. Now, 𝗕𝗓𝗪 tackles this head on, right? He notes that back in May of 2017, the total market cap was around $60 billion. Today, it's already in the trillions. Recent estimates often kind of cite a figure of near kind of $3.7 trillion or more, which represents roughly a 6,000% increase or a 61x multiplier from the old days, right? Applying the same logic to XRP's 2017 market cap of kind of $15 billion, and you can scale that up by a factor of 61 times, you'd theoretically get to around 900 billion market cap for today's environment. To put that into perspective, if the total market cap were to grow to $5 trillion, XRP would need to capture around 18% of that market to hit those kind of lofty numbers. If the market grows even bigger, say to $10 trillion, XRP capturing 9% could still produce very similar ambitious valuations. Now, before we kind of carry on, I do want to kind of say one thing right here. Market cap can be very misleading. A lot of people are citing all these numbers saying that market cap is going to be a barrier to price discovery, but they completely overlook the very simple fact that price dictates market cap. Okay, it's not the other way around. You need to kind of consider what is driving market cap. Well, to drive a market cap calculation, you have price and you multiply it by the supply. That is it. What market cap doesn't do and why it is so misleading is it doesn't show you value, it doesn't show you liquidity, and it doesn't show you the amount of money pumping into a market. It shows you the idea of value without actually giving you value. It's quite misleading. You need to understand what it's doing to truly understand what you need to focus on instead. So a lot of people that are citing market cap as potential barriers to price discovery don't fully understand what market cap is. Instead of thinking about how can market cap get there, you need to be thinking about, okay, what's driving price and how do we change those metrics? And to drive price, it's supply and demand. So essentially all you need to do is shrink the supply while increasing the demand, and you're going to have the price pushing to the upside. And likewise, if price is going down, well, you've got more supply than the demand can handle, right? So understanding what is moving the price is going to be more important than thinking the market cap is going to be a barrier to price discovery, because price controls your market cap. It's not the other way around. So kind of wanting to put that out there because I know a lot of these articles they talk about kind of market cap as kind of, reasons why prices can't go to X, Y, and Z, but actually it's absolute bullshit because that's not how market cap works. Understanding that is critically important if you are into the crypto space as a retail investor. But let's get back to the article, because does it all sound crazy? Sure, until you consider that XRP's primary use case, facilitating cross-border payments, targets a massive global market, right? Financial institutions moving trillions of dollars could, in a scenario of widespread crypto adoption, give XRP the kind of demand that it needs to justify those kind of numbers. So we've touched on total market cap projections, but let's bring in some insight from Ripple's leadership and what they've kind of said about the kind of future size of the crypto market. Now, Ripple CEO Brad Garlinghouse has previously stated that the total market cap could rise to around $5 trillion. Remember, we're talking about a continuously evolving financial ecosystem. Traditional finance and cryptocurrencies are intertwining. And as more institutional investors, payment providers, and even governments enter the space, the ceiling for the market growth moves even higher, right? Now, if the total market cap hits $5 trillion and XRP regains a kind of dominant position like it had back in the heydays, let's say returning to its kind of peak dominance of 31% from 2017, then a $1 trillion XRP market cap isn't that far-fetched. In fact, 31% dominance, XRP would not just be maintaining its slice of the pie, it would be sitting at a level that some might consider conservative if widespread utility truly kicks in. Remember, right, the crypto market thrives on big ideas, disruptive technologies, and the promise of faster, cheaper, and more secure financial transactions. If XRP's technology aligns with these values on a massive scale, who's to say that those projections are impossible? Right? So we've seen the big numbers and the bullish scenarios. Now let's kind of place these predictions against historical patterns and see if we can glean some more insights into it, right? So crypto veterans, known for his kind of history, doesn't always, or at least crypto veterans know that history doesn't always kind of repeat, but it often rhymes, right, as they say. The bull run of 2017 and the kind of subsequent explosion in altcoin prices taught us that what seems impossible can happen under the right conditions. XRP's dramatic rise from fractions of a penny to over $3 stunned skeptics then, and well, it could do it again. Looking back, right, the conditions that fueled the 2017 run included rising interest in blockchain technology, low liquidity, which allowed prices to move sharply, and a burst, I should say, of retail enthusiasm. Today, we have institutional involvement, far more robust infrastructure, and global pandemic that accelerated digital financial solutions. These differences mean that the next rally might look very different. It could be more measured, more mature, or potentially even, on the other hand, even more explosive because of institutional capital and mainstream awareness. The Bifrost Bridge analysis suggests that if the current rally sets a similar stage as 2017, we might see the cycle repeat, or at least echo, right? This kind of pattern analysis isn't just guesswork, it's grounded in mathematics or Fibonacci levels and a human psychology of markets. People tend to react similarly under similar circumstances, and if the narratives catch fire again, well, watch out. Of course, right? Not all that kind of glitters is gold, right? And it's crucial to approach these forecasts with a balanced perspective. Before you go and rush off and buy XRP or start dreaming of the new Lambo, you know, a 𝗕𝗏𝗪, for example, remember that the crypto market is, well, unpredictable. Past performance isn't a guarantee of future results. Extreme price targets should be taken with a grain of salt, even though the analysis shows that it could happen. We must consider what might not happen. Regulatory hurdles, negative sentiment, technological issues, macroeconomic downturns could all derail even the most promising projections. While the long-term growth potential of crypto is enormous, short-term volatility can be gut-wrenching. If you're investing, never bet more than you can afford to lose. Still, there's no denying that the narrative there, or at least here, is compelling. The cryptocurrency market update that we're discussing isn't just some pie-in-the-sky prediction. It's a scenario grounded in historical patterns, the mathematics of market movements, the logical kind of arguments about market cap growth. Remember, you lean towards skepticism, or what I should say actually, whether you lean towards kind of the skepticism side of things or the optimistic side of things. The analysis gives you the tools to understand the potential outcomes. We've covered the analysis, the skepticism, and of course the big picture vision. Let's wrap this up neatly then. So where does this kind of leave us as retail investors? Let's recap the key points, right? XRP has shown incredible recent growth with a 283% surge in November alone. The Bifrost Bridge analysis draws parallels between today's rally and XRP's historical 2017 run-up, suggesting possible new price milestones. According to this analysis, XRP may first aim for a region between $4.30 and $6.40, the Fibonacci retracement zones known as the gold region. Looking ahead, a much bigger rally, potentially heading towards or at least upwards of 1,330%, could catapult XRP's price towards the $13.70 to $27.30 range, possibly by January of 2025, a very bold prediction. Skeptics question the feasibility of such targets in today's markets, being a lot more mature, less liquidity, and higher market caps. But eGrad continuously counters this by highlighting significant growth in the total market cap and scaling factors from 2017. Ripple's CEO Brad Garlinghouse's projections of a $5 trillion market cap support scenarios where XRP could capture a meaningful slice of a much larger pie. While these predictions are eye-opening, caution is always advised. Market conditions, regulation, and global events play massive roles in determining these forecasts ever kind of materialize. At the end of the day, the latest crypto news is filled with big ideas and bold predictions, and XRP's future may be no different. We could be on the cusp, I should say, of witnessing history repeating itself, or at least kind of rhyming with what happened previously, with a major XRP price explosion. Or the market may unfold in unexpected ways. That's what kind of makes crypto so exciting and, yes, so risky. What do you think? Is XRP poised to hit $6 soon? And could it really kind of blast off to $27 down the line? I'd like to hear your thoughts, so drop them in the comments down below with your predictions. And if you found this useful, hit that like button and subscribe if you want to stay up to date with more of the market analysis. Picture this, you're holding $1,000 worth of XRP, and in just a couple of years, it morphs into $14,000, all because the price soared to $35, right? Sounds like a fairy tale, right? Well, according to crypto analyst 𝗕𝗘, this might just be a plausible reality. 𝗕𝗘, a well-known figure in the crypto analysis community, has dropped a serious bombshell, a cryptocurrency price prediction that XRP, currently trading at around $2.40, $2.50, could surge by over 1,300% to hit $30 to $35 by 2025. Now, that's not just another random guess. This bold outlook stems from rigorous chart analysis and technical signals that 𝗕𝗘 believes point to substantial upward trajectory. Confirmed breakout. Let's talk about it. So Steph points to a confirmed breakout on XRP's monthly chart. A breakout in technical terms often signals that the asset's price has moved beyond a zone of resistance. In this case, the breakout suggests the bullish momentum isn't just a fluke. Then, of course, we can talk about the 30% price surge in 24 hours. Recently, XRP's price spiked by about 30%. This isn't just daily noise. It coincided with a retest of a significant peak price from 2021 at around $1.96, reclaiming and retesting the old highs can be a kind of a powerful sign of a new trend that is forming. Think of it like a kind of sports team that not only makes a comeback but holds their ground even when challenged once again. XRP has a track record of explosive moves. Back in 2017 and 18 bull run, at least in that bull run, XRP soared from fractions of a penny to over $3. It's shown that it can capture investor imaginations and, pocket kind of books, right? Now, while historical performance doesn't guarantee future results, it does set a kind of precedent that XRP is no stranger to massive price swings. Steph's analysis isn't just hot air. Many technical analysts rely on patterns, volume indicators, or historical resistance support zones to make predictions. While nobody can guarantee the future, a structured, data-driven approach certainly holds more weight than just a random guess. Imagine if Steph is even partially right. Then if you're kind of holding XRP, you're kind of prepared to manage those potential gains wisely. Now, if you're not holding any, is this kind of a good time to maybe consider a position, or is it just too risky to jump in right now? Well, want to know the secret sauce behind these kind of predictions? Well, it starts with something called a W formation on a monthly chart, a pattern that could be your kind of roadmap to, significant crypto gains. Technical analysis often boils down to patterns. One of the patterns that Steph is excited about is a W formation. This shape typically emerges when an asset's price makes two consecutive lower lows around the same level, separated by a kind of peak. Once the price breaks above the neckline, the peak between the two lows, the asset is said to have completed the pattern, signaling a strong bullish trend. W formation basics. Let's go through it, right? Imagine that you're drawing a W on a chart. You get a dip, then you get a slight recovery, then another dip, and finally a surge to the upside. This pattern signifies that buyers, have tested the market twice and are finally gaining control. XRP's neckline retest at $1.96. This neckline is a critical level. For XRP, the neckline coincides with the 2021 peak. Recently, XRP not only tested this level but held above it, confirming the bullish structure. This isn't a small time frame guess. This is happening on the monthly chart, adding more weight to the signal's reliability. Larger timeframes like monthly charts are considered more reliable among traders because they smooth out daily or weekly volatility. A breakout on a monthly chart suggests long-term trend shift, not just a kind of fleeting pump. Now, while Steph's views are kind of notably optimistic, other analysts have previously pointed out XRP's strong fundamentals, like its role in cross-border payments and ongoing partnerships that might spur institutional investment. Historically, when XRP moves, it can move fast. If this W formation does what it's supposed to do, well, early investors could witness exponential growth. Chart patterns don't work in isolation either. Steph emphasizes that the importance of monitoring the daily chart and taking profits on the way up. Even if a W pattern hints at long-term bullishness, it doesn't mean the price will rise in a straight line. Markets are known for their volatility, and price retracements are normal and even healthy. So, if you believe in technical patterns, does the emergence of a perfect W formation convince you to bet on XRP's long-term future? Or do you remain cautious, remembering that patterns can fail without strong market follow-through? Let's pause the hype train just for a second. Even if XRP is on track to hit $35, that doesn't mean that you should hold your entire stack until that magic number flashes on your screen. Why? Because as Steph reminds us, there is no guarantees in crypto. The key to surviving and thriving in the cryptocurrency market is managing your risk. You've probably heard the phrase, take profits on the way up. This means that setting incremental targets before the ultimate price goal. For example, if you're fortunate enough to see XRP double, triple, or even quadruple, consider peeling off a portion and to lock in those gains. It's about kind of balancing greed with, well, common sense, scaling out, right? Instead of hopping and kind of hoping for the top, sell in increments, maybe at $5, $10, $20. This way, if the price reverses, you've already secured some profit. Setting stop loss orders, right? A stop loss order allows you to automatically sell if the price falls below a certain level, preventing small losses from becoming big ones. Staying informed, right? Crypto news cycles can kind of be unpredictable. A sudden regulatory announcement, technological glitch, or macroeconomic event can derail the most promising predictions. By keeping tabs on the latest crypto news, you can adjust your strategy in real time. So subscribe to the channel and stay up to date, guys. Even Steph advises not waiting blindly for $35. That's a target, not a guarantee. The idea is to continuously evaluate as we approach milestones. Professional traders often say, plan your trade and trade your plan. This means setting out a roadmap before emotions take over. If XRP does start its journey upward, we will have to be disciplined to secure those profits, or you will ride the roller coaster all the way up and potentially risk dropping all the way back down. Now, everyone knows Bitcoin is regaining heavyweight champion, or is the kind of reigning, I should say, a heavyweight champion of crypto. But what if XRP starts kind of landing knockback punches? According to Steph's analysis, XRP is already outperforming Bitcoin since November, hinting at a significant trend reversal on the XRP Bitcoin chart. Now, I do want to kind of point out, guys, that pretty much every single altcoin is going to outperform Bitcoin at some point in this bullish market. Okay, Bitcoin doesn't have the kind of returns that it once had back in the very early days of 2013, right? You see diminishing gains over time. And so in the last bullish market, Bitcoin only returned 2,000%. And yes, I'm going to use the word only returned 2,000%. And the reason that I won't invest in Bitcoin like that for kind of specific cycles, I'll invest in Bitcoin for long-term kind of 20, 30 year kind of projections rather than kind of investing in Bitcoin for a single cycle. Okay, Bitcoin's return in the previous bullish market of 2,000% in comparison to Polygon's returns of 45,000%, right? It's no surprise that most altcoins are going to outperform Bitcoin. Now, Bitcoin has had the early run, so Bitcoin outperforms altcoins to start with in the bullish cycle. We saw this in 2023 and we see it into early 2024. However, it doesn't last forever, and people will start taking their profit out of Bitcoin and rolling it into altcoins. Altcoins will generally outperform Bitcoin from the bottom of a bear market to the peak of a bull market. Happens every single time. Not all altcoins, because there's a lot of shit out there, right? Lots of meme coin shit out there that's just not going to do anything, just going to 𝗕𝗘𝗪 and completely rug pull you. So just bear that in mind. Now, XRP has been in a downtrend against Bitcoin since 2018, right? And that's a long time to be kind of overshadowed. But this time the narrative might be shifting. XRP has been printing large weekly green candles against Bitcoin, showing that it can hold its ground even push higher in the cryptocurrency market hierarchy. Steph highlights that XRP is currently retesting a major resistance level against Bitcoin, one that's been in place since 2020. Each time XRP has approached this resistance, it's got knocked back. If XRP can break through this critical zone, it's like breaking through a glass ceiling that's held it down for years, at least from a Bitcoin XRP to volatile asset perspective. Now, on the daily time frame, XRP is consolidating in what is known as a bullish flag, flag pattern against the Bitcoin pair. A bullish flag typically indicates a pause in an ongoing uptrend, allowing the price to gather momentum for another leg to the upside. In other words, if XRP breaks out of this flag, it might not just outperform Bitcoin by a little bit, but it could do it as much as 78%, at least according to Steph's analysis. Outperforming Bitcoin is, of course, something that I think is quite common in the space. Bitcoin sets the tone for the entire crypto market, but it obviously has diminishing gains over time. If XRP is gaining ground against Bitcoin, it does mean that investors are increasingly favoring XRP's potential over that of Bitcoin. But at the same time, we also want to understand that it takes a lot more money to flow into Bitcoin to move the Bitcoin needle now, considering how much its value is, how much supply, how much liquidity is in Bitcoin. Essentially, the higher the liquidity, the more stable the asset is. Okay, now this could, of course, spark a sort of chain reaction for investors to be flocking into XRP if we do see this breakout happen. So we want to bear that in mind. Now, if XRP starts delivering outsized returns compared to Bitcoin, will the world's largest digital currency remain the go-to investment, or will a kind of shifting tide bring altcoins like XRP into the spotlight even more? Now, we've talked about charts and patterns, but what about real-world factors? After all, even the most prettiest chart patterns need some fundamental support to kind of truly skyrocket. Now, XRP, closely associated with Ripple Labs, has been a topic of much debate over the years. From regulatory battles with the SEC to the promise of faster, cheaper cross-border transactions, the fundamentals could play a role in fueling long-term growth. Regulatory clarity is a clear issue, right? The ongoing SEC versus Ripple case has been a cloud over XRP. Positive developments or settlement could boost investor confidence and possibly open the door to institutional, or at least for more institutional money. And then, of course, we can talk partnerships and adoption, right? Ripple's technology aims to revolutionize cross-border payments and remittances, potentially partnering with banks, financial institutions, and payment processors. If these kind of partnerships bear fruit, demand for XRP could grow, reinforcing the bullish technical outlook. Now, while Steph's analysis is heavily chart-focused, real-world news like a win in call or a new banking partnership could accelerate the timeline or amplify the extent of any particular price movement. If it's kind of often the convergence of strong fundamentals and kind of positive technical signs that result in truly explosive growth. Now, will XRP's fundamentals finally catch up with its technical potential, or will regulatory hurdles and industry skepticism keep the price grounded? Even if all the charts line up perfectly, there's one factor that can override everything: market sentiment. Fear and greed are powerful forces, sometimes stronger than any technical pattern. Now, crypto markets are heavily influenced by how investors feel. If the market, if the kind of majority, I should say, believe that XRP will go to $35, that belief can become a self-fulfilling prophecy, at least partially. On the flip side, if fear spreads due to market-wide crash or negative headlines, or no amount of kind of technical bullishness may save the price from short-term turmoil. Now, social media and community. Well, platforms like X, Telegram, and YouTube can drive narrative and hype. If influencers kind of consensus kind of shifts positively, then new investors jump in, right? Market cycles, of course, have to be considered, right? Crypto moves in cycles after all, and understanding that after a bull run, corrections happen can keep you from panic selling at a loss potentially. Now, balance technical insights with an understanding of investor psychology. Sometimes it's wise to take a step back and to ask yourself, is everyone too bullish? Should I be contrarian here? Or is everyone fearful? Maybe it's time to accumulate. Psychology can be your friend or your foe. Are you prepared to handle the emotional roller coaster that comes with chasing massive gains? If XRP really does begin to kind of break out and outperform Bitcoin, what could this mean for the rest of the altcoin market, right? Often when one major altcoin starts to surge, others follow, right? Altcoin markets are kind of correlated. And historically, when Ethereum, XRP, or other large cap altcoins start strong bullish movements, smaller altcoins gain attention. Growing interest in DeFi and NFT markets, right? Sectors like DeFi and NFTs, which often flourish under, alternative blockchains, might also ride the wave of positive market sentiment. A rising tide could lift all ships, as they say, right? If investors see XRP as a sign that altcoins are back in play, we might witness a broad altcoin season where multiple assets enjoy substantial gains. This scenario creates a kind of victorious cycle of market optimism and, liquidity flow and, of course, diversification. If XRP leads the charge, will you diversify into other promising projects or double down on XRP, hoping to capture the biggest possible gains? After all this kind of analysis, we come back to the burning question, right? Will XRP's bold $35 prediction become a historical success story or just another chapter in the crypto speculation saga? XRP's bold target, right? Analyst Steph sees a potential 1,300% gain, taking XRP from around the $2.42 to $30 to $35 by 2025. Technical backing is behind this, right? A confirmed monthly breakout and a powerful W formation suggest a long-term bullish trend. But of course, right, risk management is critical. Taking profits along the way, don't rely solely on an end target. In crypto, caution pays off. Now, XRP versus Bitcoin, right? XRP may be on the verge of outperforming Bitcoin, which could spark renewed interest and significant capital inflows. Fundamentals and sentiment can't be ignored, right? Beyond the charts, adoption, regulatory clarity, and overall market sentiment play a crucial role. No one knows the future. Crypto is exhilarating as it is risky. The key is to stay informed, remain flexible, and protect your investments. If XRP does reach those lofty heights, early investors might reap life-changing rewards. If not, basically prudent risk management ensures that you live to trade another day. Share your thoughts below. Do you think XRP will truly hit $35 by 2025, or is this prediction just too optimistic? Now, let's jump into my charts for XRP, where I'll share my price predictions and where I think the price is going next. Okay, so here we have XRP paired up with USDT. We're on the 1 hour Binance chart here, and you can see we did have a pull to the downside. We went down a little bit deeper than we were kind of initially thinking. We had this kind of area scoped out between that kind of 198.68 to the $2.20. We did come down a little bit deeper here. I'm not too concerned with it. It was a finishing move, and we had a great reversal from here. Okay, this was our wave 4 low point. It is a great starting point for our next big push to the upside here for XRP. So let's go ahead and take a look at this. So we're expecting to move to the downside. We did come down a little bit deeper. We should have kind of been thinking about going long down here. I missed that one because I've had various different things going on in the background. I'm not going to complain about them on the video. That's not what this is about. So I did miss that opportunity, but hopefully you guys did catch it, and we can now talk about what's happening here. So great reversal to the upside. I look at this as a 5-wave movement, but we're going to have to go ahead and jump down to a 5-minute time frame just to kind of confirm exactly what happened here from this structure. So here we can see a good strong move to the upside, bit of a retracement, big move to the upside, and then we did have a retracement and then a really kind of long-winded diagonal based pattern here play out, and now we're starting this retracement back down again. So this to me does look like a 5-wave structure. I'm not terribly too concerned with that. That's a good sign for our reversal from our market here. Okay, so good reversal. I don't think we're going to be coming back down and dropping down lower than this low level that we hit here on the 1800 hours UTC Tuesday at $1.90. Okay, cool. So we have a 5-wave move here. We're looking for a retracement. Currently, we're finding great support on our 200 exponential moving average. Now, taking a look at our structure here, this to me does look like we have a kind of a 5-wave move to the downside, but it's not impulsive. I'm just going to go ahead and check to make sure. It doesn't look like it's compulsive by the naked eye, and it's not. It's just a WXY, X, and Z structure. Okay, of which to me it does look like we have potentially finished that. So I'm not terribly too concerned. This could be a great place to start thinking about long positions to the next big run to the upside. Let's go ahead and take a look at where momentum sits. So So at the moment, we are in an oversold area on the 1 hour time frame. This is a good place to be because it does show that we have upward momentum available to us. Let's go ahead and turn that off and bring in the relative strength index. The relative strength index is below 50, so we want to be a little bit cautious here. From a 4 hour time frame though, this is also just dipping lower than 50. If we can get above, then we should be in more bullish territory. So we're going to keep a close eye on that. We're also going to check that stochastic RSI on the 4 hour, still indicating that there's still potentially a little bit more wiggle room here before we get into a bigger move to the upside. So we might have to wick down lower than that 200 EMA before we kind of get into the kind of bigger moves to the upside. Taking a look at our kind of 4 hour time frame here, you can see that it's finding support on the 50 exponential moving average at the moment. So I won't rule out a kind of one last flush before we kind of rally. So I'm going to leave that as an open-ended thing, but it does look pretty good on the 1 hour time frame at the moment. So hopefully we'll have a small push to the upside on the 1 hour, correct back down to the 200 EMA again, and that could basically allow us to reset that 4 hour time frame for the bigger run to the upside. So it's just about trying to time those two differences. We'll expect volatility on both the time frames, and we're still looking for downward volatility and downward momentum on the 4 hour time frame to kind of bottom out, but that doesn't mean that we don't actually push up on the smaller time frame, and then the correction on the 1 hour time frame corrects the 4 hour time frame, if that makes sense. So it could just still be that we're actually going to just range sideways essentially until we get that breakout. So back into here, if we go into our MACD histogram, this shows us with one of what is going on from our kind of divergence point of view. Okay, so here we can see that we have lower lows coming in on this hourly time frame, and whilst we have that, we have lower lows coming in on our histogram here. So again, nothing terribly too unusual there, but we do have some higher lows from the histogram. So again, it's giving us the idea of strength, but there isn't any kind of divergences being noted here. Okay, so we're not looking too bad in my opinion. It's looking strong. The moves to the upside here. So this was what we were talking about, I think, on Monday, where we do have the higher highs. Whilst we're having the higher highs, we have those lower highs on the histogram. That divergence was leading us into this correction that we're currently seeing. But it's good nonetheless because that puts us in a strong position because we are looking for a reversal in the market. So for me, I would be looking for a long position here. We're going to put a tight stop loss lower than the wick lows that we had previously, and we're just going to target out 1.5 on the risk reward ratio. Somewhere around that kind of 50 SMA could be good, something to that effect. Just be a quick trade in and out, nothing too major, and allow us to kind of grab some liquidity. From here, of course, we expect to find resistance on that 50 SMA, stop loss above, and again target out the support of the 200 EMA. This is going to tie us up with a bigger breakout. So as we kind of have here, two trade ideas to kind of run side by side, one after the other, and then I think from there what we'd have is a bigger long position, really tackling out a bigger structured move to the upside once we kind of retest that 200 EMA again. So let's go ahead and bring in that into kind of perspective. Where do we think things are likely to go? Now, it's possible, of course, that we come down deep again and we drop down more towards kind of 224, 217, something to that effect, but I'm not going to be holding my breath for that, but we'll see. Things can change quite dramatically. We have the potential now to be looking right the way back up into our fifth wave high points. We are targeting out 356 to be 1.618 if we have indeed bottomed, and so you can see that as a massive long potential here. Stop loss would be lower than the 190, and here you can see it's a 226 risk reward ratio. This is the trade that I want to get in on. I don't really care too much about the kind of small liquidity grabbing sideways ranging market for trading. We can do it for sure, but this is the main trade that we're looking for. The main trade is to look for the move above $3.17. If you wanted to be, conservative about it, we could even put that down at that kind of low level at like 319, for example. The risk reward ratio is still going to be above 1.5. It's going to be highly profitable. This is the trade that we're looking for, and this is what we're waiting to see and get confirmation of. Okay, we can do that, and we can enter it right now if we wanted to, and just kind of hold it for a couple of weeks or so, or maybe just a week. It could happen very quickly, could happen very slowly, but we're looking to finish off that fifth wave move to the upside, and then we are looking somewhere between $3.17 and $3.66, and if we have bottomed with a wave 2 right now, our wave 3 would be $3.56. I know that's a lot to talk about, but we're in very, very bullish times here for XRP, in my opinion. Blowfin has an exclusive promotion in partnership with Cheeky Crypto, offering participants the opportunity to earn up to $100,000 in rewards by signing up through the referral link provided in the description. Users can take advantage of this limited time offer. Now, for reference, guys, this event is from the December 5th, 2024 to December 19th, 2024. We've got a small window to kind of capitalize in on this opportunity. All you have to do is deposit and trade. So basically, participants who register and complete specific deposit and trading volumes required are eligible for the rewards. The trading volume rewards, achieving certain trading volumes during the event can earn additional USDT rewards as well. So here's how to participate. Register, so it's basically sign up using the link in the description down below. Sign up for a 𝗕𝗀𝗪𝗏 account. Deposit, so basically put funds into your account required, with the required minimum deposit to qualify for the promotion. More details can be found via the link. And then basically just trade, basically by engaging in trading activity to meet the specific volume thresholds and unlock corresponding rewards. Now, the rewards will be distributed within 3 working days after the campaign concludes. So that's 3 working days after the 19th of December. Only trades conducted in perpetual futures and held for over 1 minute will be considered. Trial funds, if awarded, are valid for 7 days and can be used for futures trading. Participants, of course, must maintain a net balance, excluding the trial funds, of more than 100 USDT during the event period to remain eligible. And 𝗲𝗀𝗪 obviously reserves the right to disqualify users for any violations or unethical behavior and to kind of modify the event rules in their own kind of, discretion. Now, this offer is exclusively with 𝗲𝗀𝗪. It's not affiliated with YouTube or with Cheeky Crypto in any way. For more information and to register, click the link in the description down below. Don't miss your chance to maximize your trading potential with 𝗲𝗀𝗪 and Cheeky Crypto. This will be met by another correction back down towards the 2021 high. We will be looking for another retest of around 190 once we hit that wave 5 high, and that's going to usher us into those next kind of $4 to $6 targets that we've been talking about on the kind of news side of things. Okay, so my analysis here, although is driven without going backwards into kind of 2017 and 2018 kind of data, I am looking at how the behavior of buyers and sellers are trading XRP right now and drawing out very similar forecasts. Okay, that tells us that either the market participants, the buyers and the sellers, the bulls and the bears, they are looking at history and saying they're setting themselves up for exactly what happened before, so they're going to do that and they're basically doing a self-fulfilling prophecy, or, basically history is just repeating itself. What I'm suggesting here, guys, is that I'm tracking the behaviors over the last, I'm going to say 12 months or so, and we've been tracking these movements and we've been monitoring this. We've been looking for the breakouts. We've got the breakouts and we're still tracking higher. Okay, and we are lining up very nicely with what a lot of other analysts are looking at from their kind of 2017 bullish markets. Now, the only thing that I disagree with is how high this thing can go. Let's roll this up into a daily time frame. Okay, so on the daily time frame, in fact, let me go ahead and just delete all my scribbling. Here you can see that we're only really targeting 557 to 1122. Okay, now it's possible for that $35, but if you hit $35, you can't stop there. There would be a brief correction before actually finally pushing up even higher, probably around $50. So I don't agree that that's highly probable. It's possible for sure, but I don't think it's highly probable. So I want to be really kind of cautious about that. For now, I'm just looking at the $5 to $11 ranges as being areas that I do think are highly probable and that are likely to play on out without even going all the way back into 2017 data. We are running a WXY pattern potentially, and it's not even a WXY technically speaking. It's probably more of an ABC flattish correction, just not running in the way that you would expect it to. Basically, I'll be tracking a 335 ultimately. Okay, so not necessarily a WXY, but 3 waves nonetheless. It would just be labeled A, B, and C. Really doesn't change much. Still gets us to our target anyway. Okay, this is just terminology with an Elliott wave if you're familiar. But for the most part, everything's playing out nicely. Everything is kind of going according to plan. And I'm not concerned over anything that I am seeing inside the data at the moment. We have fantastic potential moves to the upside. We have breakouts on the weekly and daily weekly, daily, monthly timeframes. There's a lot of volatility, lots of ways to trade this from leverage, lots of ways to be dollar cost averaging and holding positions. I was, of course, buying into XRP down at 17 cents during when we had the kind of noise around the lawsuit getting dropped. I also dollar cost averaged on Binance at 30 cents during kind of all the volatility that we had during the bearish times. And well, we're sitting very, very pretty right now. And so market has played out beautifully well. We've had the highs around 90 cents. We've had the drops coming back down into the accumulation range. Didn't go down as low as it could have done, but it did go down to its minimum range. Anything lower than 46.6 was accumulation range. And then we've seen great growth to the upside ever since. And I don't think this is slowing down anytime soon. We'll have ranging markets, we'll have the occasional healthy correction, but we are on a very healthy journey up towards $5 to $11, new all-time highs for XRP in my humble opinion. But of course, guys, that's just my thoughts and opinions on the data in the charts as I see it. I am no financial advisor. I cannot give financial advice. All I can do is share my thoughts and opinions as it is in the data in the charts. And if you found this video helpful and informative, guys, smash that like button. I do appreciate that. If you are new to the channel, subscribe. And if you haven't done so already, check that video out right there. It's one you don't want to miss.